Good morning, everybody. Happy Monday. Hope your Monday trading session is off to a good start. Let's pivot away from the YOLO trading and the stocks, and let's talk about futures with Jim Cagnina from NinjaTrader. Let's do it. Mr. Cagnina, how are we doing today?
Pretty good, pretty good. It's Monday morning, man. Ready to go.
Yeah, before we get started, congratulations to you and NinjaTrader winning best platform for trading futures at the Benzinga FinTech Awards last week. So nicely done.
All right,
That's
thank you.
why we're doing this show with you, right? I mean,
Yeah.
it all makes sense. It all makes sense.
Yeah.
We got some things to talk about today, right? We're going to talk about the S&P 500. We're going to talk about Bitcoin. We're going to talk about gold. We'll answer your questions from our chat. But before we throw it to Jim and his charts, everyone do me a solid and hit that like button for me, please. I'd appreciate that. Jim would appreciate that. Thank you very much. Mr. Cagnina, let's bring up those charts here. And let's take a look, see how we're doing today.
Yeah. Okay. So we're going to start with the E-mini S&P 500 stock index futures. Real basic. This is a daily candlestick chart. I have very little information on here. What I did was I drew a parallel channel. You can see this green kind of channel that's pretty much just kind of demonstrating this bull run we've had in this particular stock index futures market, which has been pretty strong. Last few days, we had a little bit of a pullback, and now we're back in bull mode. I've highlighted what I'm calling an area of support in this little rectangle right here, right? We haven't closed in there for, several days. And right now, to me, that's the area of support, which is a good thing. And the other thing I've done is I've added a Fibonacci extension to give me some targets on the upside. So again, I see some continuation on the upside, even though it might be a little counterintuitive to what's going on in the general scheme of things with inflation and interest rates and supply chain constraints. I'm gonna say the chart is more important than all that other stuff.
Okay. Wow. So we've got some temporary support. And as you and I were just talking, Jim, before we hopped on here, just to sort of about the action today, and it seems like it's like the same thing every single day where, you get, in terms of just the internet price action, you get this reversal at 10 o'clock, right? We've just, we opened high and give back a little bit of those gains for the first half hour of the trading session, and then 10 o'clock comes and it's just the moment. It's the moment.
Yeah, absolutely. And we saw it here. Here's a intraday chart, a 10-minute chart of this particular market, and you could see, right, we were pretty strong at 7 all the way up through the 7:30 to 7:40 time frame, and then things started trickling back down here to where we're at right now. So we had a huge kind of big cornerstone candle actually is forming as we speak right now. And so from looking for places to buy point of view, let's slow our roll. That reversal that you just mentioned just happened, and let's kind of wait to see how this settles out for next 10, 15, 20, 30 minutes.
Yeah. Oh, we just went even lower there, huh?
Yeah.
All right. Yeah. We are at. Is it fair to say, Jim, we are at the critical point of the day, or no, or not, in terms of time and/or price, or not really?
Today's going to be hard. I mean, there's not a lot of economic releases today. There's the infrastructure bill that's kind of people are dissecting right now. We could have. I don't know if this is going to be a big down day today. I think eventually we're going to find some support and buyers are going to come in again, and we should get back up to this point of control. That's my opinion. I don't know. I mean, that's what I'm thinking. So,
all right, but no active orders out there. Just sort of waiting and seeing.
Yeah, no, pretty soon though, because what I want to see from a day trade point of view, we have all of the series of these lower highs a series of these lower lows, and this is the first candle really where maybe we won't have a lower low anymore, and then I'm going to be interested in trying to maybe get in if we don't have another lower low. Now the other thing is this wick right here. This is really a nice looking wick. Look how long it is. Look how pretty it is. A lot of times, this does attract price a second time on a 10-minute chart. And so again, patience is the order right now.
Okay. Long, beautiful, gorgeous wicks in the S&P 500.
I love it.
What else are you watching here?
So, all right. So quickly, there's a couple other things. So Treasury bonds are in play again, and this is the 30-year Treasury bond, and this is the longer duration side of the yield curve. But a lot of times, this market is smarter than everybody else, in my opinion, and it's kind of leads a little bit sometimes. And what we're seeing right now is, we're breaking down past this, my dotted line here, which was, let me kind of make it bigger to see, my trend line here, right? Things are turning around to the negative side from a bond price point of view. And remember, prices and interest rates are inversely related. So keep that in mind. And then my moving average cross, this is now are starting to cross and diverge to the downside. So I see some downside, significant downside in the 30-year Treasury bond futures right now. So I'm looking for places to sell this particular market at this point in any given day. And it's moving nicely today, as you can see.
All right, so what do we have to lean on here? Maybe a level on the upside to sell against, or what?
Yeah, I mean, if I literally, let's go ahead and shoot over to a 10-minute chart though, so I can kind of be a little bit more scientific, because that daily chart we saw is a relatively big bar today. So from this point of view, here's kind of what we're looking at now. Bonds do retrace a lot, and you can see.
I think this is gold. We're looking.
Oops, I'm sorry.
Yeah. Okay. There we go.
All right. Well, I'm going to stick to my guns and say bonds do retrace a lot. So, but this is pretty negative right now. So I wouldn't do a counter trend. I would not try to buy something right now. I'd try to look at the bottom of the value area as a potential place to maybe get in to a trade. And maybe if you're super aggressive, super conservative up by the point of control, I don't know if we're going to get up that far up right now. But so the play for me would be trying to see if we can get a pullback up to the 09s. That's conservative. And this was yesterday's low, and I think we're going to keep making lows today.
What specific futures contract is this? Because there's a lot of Treasury futures out there.
Yeah, so you get the whole yield curve, right? So this is the classic, but I'm going to call it the classic 30-year Treasury bond. And it represents a 30-year Treasury bond, but it's not a true 30-year because the average duration in this underlie is about 26 years, but it's still the far side of the curve. There's a new, relatively new contract called the Ultra Bond, which is a true 30-year. But it moves twice as much, and it's a little bit more dangerous from a retail trading point of view. So that's why I like this one in particular.
Okay, and that's the more active one, more liquid?
This one is the one we're looking at right now.
Yeah. Okay. Great. All right. So we've got S&P 500. Jim is a broken record. He's still bullish. And we got 30-year Treasury bonds. He's got a bearish bias, at least for the day. We'll see how things shake out here. What else are you watching, Jim?
All right. So now this is really interesting, and this chart might have a lot of stuff on it, but I want to show it to you. I'm going to pull up the Bitcoin chart.
Yes.
So this is the Bitcoin chart, and there's a lot of stuff going on here. I think we're in bull mode. I think we hit an area resistance up here where my rectangle is, and the way I draw areas of support and resistance is I try the bottom of my rectangle will kiss up against the top of a candle. Right. And then I kind of find the highest peak and then move it up a little bit. So this is kind of and this is more of an art than a science, but this is how I kind of identify these kind of shorter term areas right now. I have a trend line here in the dotted blue right now that's running upward in a positive fashion.
That trend line is just what you're picking on all the recent daily lows. Is that?
Yeah. Yeah, so I went from this swing low here where my mouse is,
Mhm.
and I kissed the next lowest thing, which is yesterday, or the session before today,
Right.
and then here's my dotted line, kind of just auto generates there with the NinjaTrader software. So that's kind of what I'm looking at right now. If we start breaking down below that dotted line, then maybe we're not quite so bullish. But more interesting than that, in my mind, is I have this gold uh, line on close overlay chart that I made, gold futures, right?
Mhm.
And we talked about this I think it was last week. This is everyone was gold. The place you go for when inflation starts, rearing its ugly head. And I wasn't so sure last week, but now I'm going to say, yeah, look at this. I mean, this is really, 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 really an aggressive move up for gold. We're approaching again that magic 2000 level. You could see the black indicator here on the right. We're at 1864. So not too far away, but a few more sessions, who knows? So that gold bullish, strong, and equally as interesting is on the overlay chart. What's the correlation between?
Yeah, that's what I'm looking at here, and I got to admit I'm struggling a little bit. I mean, I don't know. Tell me what you see first.
Well, it's not 100% correlated for
Yeah,
sure. Right.
yeah,
And, Bitcoin has failed us before from an inflation hedge point of view. But I think it's more correlated than not as I see it right now.
yeah. I mean, I see like it's obvious that there is some correlation there, but you're right. It's not 100%.
Yeah. So, but I think it's interesting to note. And when I did the overlay chart this morning, I was like, wow, look at gold, man. It's like, it's moving. So, that's another market in the move. And if I were going to make it, trade in the gold market, I'd be looking for places to buy again. It just seems so strong right now.
This is interesting. I admit I hadn't realized I hadn't looked at gold. I stopped looking at gold really because gold doesn't move. Gold doesn't go anywhere. But so I had lost track of it. I did not realize in the last week what had happened. So I mean, like, how do you stand? Like, where do you stand here? Are we? If I'm to look at this chart and to understand what you're saying, you're you're maybe thinking that there is some temporary downside based on what Bitcoin did, right, for the last couple of days. Is that
No, I think the opposite. I think there's temporary upside on Bitcoin.
well?
I
Oh, no,
think,
but what about gold though? Because I'm just watching and it looks like gold tends to lag Bitcoin by a couple of sessions, a little bit. I don't know. It's hard to tell here from this chart, but I mean, if we peaked in Bitcoin like 3 sessions ago, right, and we
mhm.
we peaked in gold 1 session ago, you know,
Yeah, I don't. From a timing point of view, I don't. I would kind of stay away from that
okay,
general
okay,
idea. I would use support resistance lines. I would use Fibonacci, which
okay,
you could see I have another extension there, and I would kind of treat them independently from a trading point of view. But keep in mind that there's going to be some parallel action in these. I think.
okay. So because you're bullish Bitcoin, you're bullish gold. And we're using our Fibonacci extensions, which we'll talk more about in a second here,
Yeah.
to sort of guide your where you would buy, right?
Yeah, for sure. Well, and these extensions are targets, and we're going to talk about those more in a second, as you said. But when you have a market that's trending like this, one way, and you see it more clearly in the ES. Let's just tackle that for a real quick second. When you have a market like that, to do a fib retracement, which is the old conventional way of looking at it, your price points are just too far apart to help you with trade decisions for that day or that week even. So you can go to the extensions to try to figure out, what are good targets on the upside.
Something you mentioned before, though, with regards to the Bitcoin thing that I can't get past is Bitcoin has failed us before as a hedge, right?
Yeah, I mean we've seen, and I don't have my historical data here on this particular chart, but we've seen some big price dislocations, thousands of dollars in Bitcoin before, right? And if you think of it in terms of market forecasters predicting doom and gloom, on the stock market, right? On the stock market, which happens all the time, right? Everyone's like, all right, we're in a bubble now, we're going to sell off. We're in a bubble now, we're going to sell off. We're in a bubble now, we're going to sell off. And it never, I guess a blind squirrel gets an acorn every once in a while, but this is, long term strong bull market in the equities. So, we've had cases in the past where, hey, let's get into Bitcoin because this market's going to sell off, and it doesn't. It just keeps on marching up.
All right. So just to recap here, bullish S&P, bearish treasuries, bullish Bitcoin, bullish gold. Any other markets here that we're watching before we kind of get into today's lesson?
I have one eye kind of on crude oil. This is just a daily simple crude oil candle. There's a lot of information in the news about this market with OPEC plus, and then you have, the Glasgow, summit is a kind of a competing idea. Then you have the infrastructure bill, which is heavy on clean energy kinds of initiatives and all of this stuff. So keep my eye on this. Crude oil is not going away. We're a long way from 2050. So this is going to be a really, really important market right now. And with prices this high, it's going to add to inflation, right? I mean, not only do we rely on this to drive our cars and heat our houses, but also manufacturing process relies on energy as well as part of their inputs, and their margins are either going to go down or they're going to start, they'll charge us more money for the products. So I have my eye on this right now. I don't know that I think it's a neutral market at this point, and I'm not, it's any given day you could either go long or short and probably find a good trade idea.
You've got Biden over the weekend talking about strategic petroleum reserves, and there's so much geopolitical unknowns with oil. It's just, yeah, I don't know. To me, it's all noise, but that's why I guess you tune that out and just look at what the chart tells you, probably.
Yeah, I mean, what happens with the pipeline? We have one administration that's pro-pipeline, the second administration that's anti-pipeline, the third that, and as you go through this uncertainty, how do you invest billions of dollars in a pipeline if you think the next administration is going to shut it down? So it's kind of a real hard infrastructure play.
Yeah, for sure. All right, Jim, I want to get to today's lesson of the day, or lesson of the week. We're calling it. We sort of teased it before, but let's get to that because super relevant. I think we're talking about, of course, Fibonacci. Future trading tip of the day. All right, well, what do we got here?
All right, tip of the day. As there's not too much to worry about on the economic. Oops, where do we go? Here we go. On the economic releases, but we talked about targets using the Fib expansion tool, and on a breakout. Actually, you know what? Let me put my chart side by side here so it's easier to see. On a breakout, I'm looking for some targets that I think could be achievable in both the S&P 500 and the Bitcoin futures, and I guess you could extend that to the underlies, right? So again, on these extensions that I have put up here on the chart, I'm looking at some targets, right? So my first target is 47. 47.18, and again, that's when if we get a breakout, I'm going to put a condition on there, which I know I hate when I hear conditions, but if we get a breakout and we start making new highs, T1 is 44.17, and then T2 is 47.75. 47.18 to 47.75. Those are my two relatively short-term targets too for this particular market. So that's using those extensions, and then shooting over to the Bitcoin, same thing. T1 actually would be inside my rectangle because we'd have a close inside this rectangle here around 68,505, and then T2, pretty high up, 71,655. But with the volatility potential of this market, I think we can get there.
Explain T1 and T2 again.
Okay, so T1 is just target one. I think I made that up.
Okay.
it's
No, but not just like the number, but like what it represents, though, right? So
yeah. So okay, let's take a look at the very first. Let's go back and look at the Bitcoin candle chart.
yeah.
I drew my rectangle here, right? And then I also drew my extension, fib extensions, right? And 0%'s down here at this swing low, and then it extends it up. 23.6 is the next area interest, 38.2 is the next area, 50, and then 61.8 to complete kind of my area of interest right now. And right now, we're down here. We're at 23.6, right? We're not close, but if momentum continues up here, and we get into my rectangle here, my first target's going to be 505.
So,
And
but what does that represent for you, though? Does that mean you're willing to take a long there, or you're willing to stop out there, or what?
No, so well, that's a great question, right? So traders can look at this two different ways. One way is, hey, we want to go long here, or as we approach there, we want to go long. Alternatively, the counter trend trader might say, okay, when we hit that, that's our area of interest. We're going to go short, or maybe we want to have a stop loss there, or something like that. In my particular point of view is, I want to be long here. And then I might, the 71.65 is a nice target. If you're long now, the 68.505 is a nice target.
I'm just responding to someone in the chat about what futures we had prior to the Great Depression. So wait, so say the last part again. I'm sorry.
So again, when I say targets, it's like
Yeah.
if you have a long position, here are the targets that I
Okay,
think.
so right. If you have a long,
Yeah.
If you have a long already, right? Okay, so that was the key part there. What if you're trying to initiate a long?
Well, you certainly could do that, and depending on your trading horizon. So if you're a position trader or a swing trader, you could initiate a long whenever you want. I mean, you could initiate a long now and hold this over. These targets might not hit today, but I think that they're nice targets from a longer term point of view. Maybe a week, maybe 2 weeks. I don't know. So that would be a good swing trade if you're putting it on right now.
Okay, and I'm just sort of staring at this chart a little bit just to sort of understand what the different Fibonacci extensions are, right? Can you explain those other ones here? Because for people who don't know.
Yeah. So remember that Fibonacci is based on the Fibonacci sequence, right? So you take 0 and 1, and then you add them together, you get a 1. And then you take 1 in the previous number, which is a 1. You add those together, you get a 2. 2 and 1 is 3. 3 and 2 is 5. 5 and 3 is 8. 8 and 5 is 13, et cetera, forever, right? That sequence, it's a mathematical sequence. And when you start dividing these numbers against each other in the sequence, you routinely get these percentages, right? You get 23.6, you get 38.2, you get 61.8, and you continually get these ratios, right? That happen in nature, they happen in the sequence, and traders have adopted these as a tool to help predict or help forecast where prices can go.
And this can apply to any chart, but we're applying this to the Bitcoin futures, but
the
S&P, but it can be applied to anything. So, are you using is this one of the tools that you're like relying on the most?
Yes. From a day trading point of view, it's kind of a 50-50 toss-up between volume profile and
because we've talked about volume profile an awful lot here, but we haven't talked as much about the Fibonacci stuff.
Yeah. So on today's chart, we probably wouldn't do an extension. We would just do a regular Fibonacci. And let me just kind of I'll just show you really quickly how I would do that. I'm just going to use my drawing tool here, and I would do a retracement. And you're going to pick a swing high to swing low, or swing a low to high, or high to low. In this case, I'd probably pick high to low, and then just kind of click at the high and bring it down to the low. Or you could even bring it down to the low of the day, if that makes you feel better. This is another where it's art versus science sometimes. But so this is 100%, right? So if we come all the way back up here, we'll have retraced 100% of the way. If we come back up here, we'll retrace 61%, here 38, and right now we're trading around the 23.6, right? So a bullish trader might say, hey, this might be an area of interest. Might want to go long here and then put my stop at the lows. That's a total legitimate idea. The other idea would be the opposite, right? I'm going to use that as an area of interest, and it magically corresponds with the bottom of the value area on my volume profile. That happens a lot. It's weird. Can't explain it.
Well, that would mean like a double signal, right? Right. I mean, that would mean you have to place an order out there, right? If you have your volume, your two main indicators are your volume profile and your Fibonacci, leading you to the same price, the same level, right?
Yeah, right there. I mean, it's exactly what I'm doing just right now. I'm just going to I'm going to make it even exactly where it's at. So that's exactly right. It's a double confirmation. And then you're going to use the other two indicators that I have here. Maybe you have different ones. Maybe you're using RSI or MACD or something like that. It's these two indicators are a little bit negative still, but not negative enough for me to freak out about it.
Got it. All right. So that's a quick primer on how to use the Fibonacci extensions. And again, I think what most people like about them, Jim, is they're relatively simple to most people probably don't even understand. I don't understand like the mathematics behind it, but you don't have to, right? That's not even the point. The point is they mathematically work, and they're pretty simple to apply to your charts. They're simple to look at. They're simple to understand, and that's why people use them, right?
Yeah, and there's a weird theory out there that these kind of have been adopted, and this kind of a self-fulfilling prophecy. Maybe it's because the science is hard to explain. This is just a natural recurring sequence in nature, right? So it's a weird thing. But now, if we got one more second, what I drew was a retracement, right? High to low. On the trending markets, we used, and I'll show you on the tool, we used the extensions. These are two little bit different ideas, but that gives you the same effect, right? And let's take a look how I did it here. And you need three areas to do the extension, right? So I did a swing A, B to C down here, and then it does it. So on trending markets where you're bumping up against a high, you want to do the extension. On markets where on intraday markets, mostly intraday markets, you could do just a retracement.
Guys, we got a couple minutes left here in the show. If you have any questions for Jim, please drop them in the chat, and I will ask it. And I want to mention, as always, that you can learn more from Jim. There are a bunch of links, resources in the description. The one that's up on the screen now is NinjaTrader.com/platform training K sensitive. So capital P, capital T is where you can find more from webinars that Jim is doing every single week. There's also NinjaTrader.com/get started, and just NinjaTrader.com/features as well, just to learn more about how you can trade futures and use the platform. But any questions, please? We got a minute and a half here. Oh man, Steve Zach, why is soy meal ripping today? I don't even know if that's true. Steve might be trolling us. I have no idea. Steve,
I mean, soy meal.
I have no clue. Jim, do you have any idea?
Yeah, they're up about almost $10.
What? Oh man,
I don't know if I'm reading my quote board right. I have no idea. That's not a market. The commodity markets are really great to trade with NinjaTrader and the futures markets in general. But they're specialty markets. We're talking weather. We're talking old crop versus new crop. We're talking, all sorts of factors here, import, export, everything. It's a specialty field, and you need to be singularly focused on the grain markets if you're trading those kind of futures markets.
Question from Matty Ice on the Fib extensions. What are the numbers to the left of the extension? Not the price levels, but the ones that look like ratios. Here, let me pull up. Let me go full screen here. Yeah, those are the percent. Those are the Fibonacci percentage numbers. That's like the math, right? That's like the
yes.
Fibonacci math. That's the sequence right there.
Yes.
That's what those numbers are, Matty Ice. Those are the ones in parentheses are the price levels. The percentages, but that's the sequence. That's what it is. So 23.6, 38.2, 50, 61.8. I don't know why the math works. Jim doesn't know why the math works, but I don't know. It works.
Again, we're looking for areas of interest is all.
Yeah.
I mean, and then when you get a cumulative amount of areas of interest, it's good. And I do want to, if I got one more second, I do want to mention the rest of this week, the Fed speakers, Federal Reserve people, they're going to be out and about doing speeches left and right. So you got to kind of pay attention to those things, because sometimes those speeches do kind of jar things up a little bit.
Yes. Yeah, you mentioned that last week as well. Just the parade of Fed speak after the announcement 2 weeks ago.
Yeah.
And we certainly had a lot. So hey, as a reminder, guys, we're doing this show every single Monday at 10 a.m. Jim Cagnina is the senior education and training specialist for the NinjaTrader platform. Joins us every week for a half hour to talk about futures and talk about trading futures, how he does it, and how you can do it, and answer your questions from the chat. So drop us a like, Jim. Any final thoughts for us today?
No, I mean, it's been great. Looking forward to good trading this week.
All right. On that note, I'm going to hop off here. We got our next show, Benzinga Live. We'll start at around noon ET today. And Jim, good luck. Did I see you got filled, or what happened?
Yeah, we did get filled. So literally on the long S&P trade, we got filled right at our 23.6% retracement. You could see it right here on the trading ladder, 82 even. And we're in play right now, so we're going to try to manage this one as we go forward. But this is just in full disclosure. We're in simulated live mode right now.
Yeah, fair enough. That's always important. All right, everyone, smash that like button, please, and thank you. Jim, good luck with the rest of your day. Stay green, and we'll talk to you again next week, everyone. If you're trading along, also stay green. That's usually a good idea. Jim, have a good one, sir.
You too, Spencer. Thank you so much.
All right.